Hello. My name is Alex. I am an audio bot for BestFreePennyStocks.com. I will be reading to you today. Title: Tips for Day Traders. Brought to you by BestFreePennyStocks.com. So you've made the choice to become a day trader. You may not realize it, but your choice conveys not only a host of assumptions about you and your trading skills, but also will force certain changes in your ongoing trading style and trade-related decision-making. Let's make sure you're aware of the implications of your choice. The cardinal rules of stock trading all pivot around the central topics of knowledge and research. Whether the tip is to trade what you know, to do your research, or to use your charts and tools, at their core these tips all underscore that fundamental fact that you should not trade in any stocks without first acquiring the necessary competency to understand how the markets work, understand how stock prices are influenced by outside forces, and understand how to use analytical tools to your benefit to at least a minimal degree, such that in combination, you can rely on these three core competencies when making your stock picks. Most investors, whether beginning or experienced, understand this dynamic in the same way that a baker understands not to invest his efforts or capital into the opening of a commercial bakery if he has never baked a cookie or worked with yeast, or if he has no recipe. The baker starts small, and so should the investor, by investing for the long term and continuing to hone his skills and expand his knowledge base. If you have not reached the end of the stock investing learning curve in terms of knowledge and skills, you should not become a day trader. If you invest for long-term value, and your skills lie in that corner of the investment spectrum, you should not become a day trader. You should only try your hand at day trading if you are comfortable enough in your buying and selling activities and fluent enough in the language of charts and indicators to be able to perform the same functions and the same analysis within a vastly truncated time frame. As the name would imply, day trading involves closing out your positions every day. Profits are made by scalping incremental price movements over the course of a single trading day, and are accumulated through the repetition of the same scalping activities day after day, week in and week out. The day trader is not building a portfolio, but rather is flipping for quick profit. In order to do so successfully, the day trader must possess sharp analytical skills, quick judgment, and an even temper. Most importantly, engaging in day trading involves a highly different risk profile than does long-term trading, and the successful day trader must be able to assume this risk when faced with the inevitable daily losses, which are to be expected. No one picks a winning trade 100% of the time. If you can't handle the heat, stay out of the kitchen. When buying and selling stocks for long-term gain or capital accumulation, you're trading against the market. Your decisions are based on your research and on your assumptions, predictions and hunches about how the results of your research will affect what the markets will do in reaction to a variety of external stimuli. These stimuli can be as general as economic or political news, or as specific as company press releases, announcements or SEC filings. In day trading, you're not trading against the market, rather, you're trading against other day traders. While most day traders might follow the same basic scalping strategy, the pros are waiting for you to come along so that they can take advantage of poorly placed stop-loss points and your inexperience in identifying breakouts and reacting appropriately. Professional day traders are more than happy to hand off their positions to you and buy back from you when the price lowers to your stop-loss. Adjust your strategy accordingly to account for this change in the trading dynamic, and, equally importantly, adjust your mindset. When day trading, do not focus on how much you can profit, focus instead on how much you can lose. This is the critical distinction not only between day traders and long-term traders, but also between successful day traders and those who are less so. If you fail to focus on how much you can lose, and instead emphasize how much you think you can make, you will certainly wind up handing your funds over to a professional day trader. Again, the key to successful day trading is limiting your risk so that you protect your capital. The primary method utilized by successful day traders to limit their risk exposure is to never place more than the smallest percentage of their equity into any one position. Considering the speed with which successful day traders buy and then subsequently sell shares, often, this is accomplished within a matter of mere minutes, and the unpredictable way in which stock prices can react within such a short time frame, this is prudent and logical behavior which you should emulate. It's easiest to understand this concept when you step back and take a broader perspective. Although the trend for a particular stock may be up, and although that stock's closing price may well wind up being higher than was the day's open, even upward trending stocks do not move in a straight line. There's upticks and downticks along the trend lines throughout the day, and if your timing is off, you can still lose money day trading even the winningest stocks. Limit your risk by limiting the size of your position relative to your total equity, and focus on the number of shares you are buying and selling rather than dwelling on those shares' value. When you think that the daily volume and the volatility warrant your move, start trading. Bide your time if you have to and wait for a handful of appropriate trades. Knowing when not to day trade is equally as important as knowing when to jump in. If you think you have identified a target stock but are hesitating, don't trade. Your emotions have already gotten the better of you. Set aside regular trading hours, but don't force yourself to trade every day. Trade only when you have the emotional discipline to stand by your stops, the flexibility to accept a loss, the calm to take it in stride, and the confidence to shake it off and look for your next move. Remain rational at all times. Be patient and do not overtrade. Lastly and perhaps most importantly, protect yourself. Protect your capital by keeping your positions small and frequent, minimizing risk. Protect your positions by not day trading in the same manner that you would trade for portfolio growth. Protect your future by removing your profits on a regular basis and sticking them into a 401k. Protect your sanity by remaining detached, stepping away from the screen and avoiding overtrading. Control your risk and you can control your trades. Control your emotions and you can control your risk. It's simple, but not necessarily easy. To learn about penny stocks, stock tips, and much more, visit BestFreePennyStocks.com.